please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Morning Call. I'm Lata and with me are Anuj and Sonia. Well, those words are going to ring and echo through the markets, that of Jerome Powell, the new Fed chairman. It is his optimism that is creating pessimism in the stock markets. His optimism over the US economy, and to a pointed question saying that, he didn't say that there will be 4 rate hikes, but he said all options are on the table, and that's what kind of hit the market. To be fair, the US markets actually moved off the lows, and the US 10-year as well, while it is at the moment at 2.91, had gone to a high of 2.92 plus and has since receded. But the point is, all that has rattled global markets. After all, cheap money had led to a lot of asset inflation. Some of the assets can be justified by earnings, but some maybe credit markets cannot be justified when the cost of money rises. So there is, understandable rattling. But I think the Indian markets will have a double whammy. There is that diktat which has come from the government that PSU banks will have to look at every loan over 50 crore, that is every bad loan for fraud. Now you never know what will come out. Yeah. So that's what will keep the Indian markets a little worried, extra worried than other markets.
Oh yes, Lata, good morning, Anuj, morning. And that's what happened yesterday, right?
Absolutely.
The PSU banks, they soured the sentiment in the entire market, and we saw the market reverse its gains that it saw in the previous 2 days. Anuj, morning. What's the sense you're getting now after the kind of fall we saw yesterday? The PSU bank index fell 3.5%, but even stripped of that, the market was under a bit of pressure.
Yeah, morning, Sonia. You remember on Monday we were discussing this, that don't get too excited about this rally and the fact that this is a counter trend rally. Look, the time to buy was on Friday, time to sell was yesterday. After a 300-point decline on the bank nifty yesterday and about 30 points on the nifty, the SGX is indicating we'll again have a gap down. I don't think there's a trade there, because from in 1.5 days you would have fallen 100 points on the nifty and about 500 on the bank nifty. But short point here is that the market has given a classical counter trend rally and a 20 DMA halt. 20 DMA halt is essentially when in a downtrend you rally and then you halt at the 20-day moving average. Which is where the nifty 10,630 thereabout. It's falling, of course. The bank now, this market has to be differentiated. Bank nifty and the rest of the market. The bank nifty defended its first test of 200-day moving average. Normally, second attempt of breaking a 200-day moving average is successful. So the 200-day moving average is 24,700 on the bank nifty. There's a good chance, of course, won't happen today, but there's a good chance that rallies will be sold into and the bank nifty would make a move there. The nifty is slightly more tricky because IT sector is doing well. Even yesterday you saw IT stocks did well, and rupee is likely to depreciate. So obviously there's a bit of a tailwind with the IT sector. Reliance is doing well. A lot of exporters are doing well. So on Nifty, the 20 DMA is falling and 200 DMA is rising, and the equilibrium is somewhere in between 10,600 and 10,100. You find a midway there, and that also coincides with the recent low as well.
But so it's not a bad thing to be in that range, right? I mean, compared to where we were about 2 weeks ago, when there was a view that this market would fall in a linear fashion, now we've sort of come into that range.
Yeah, the reason this market should not fall or would not fall in a linear manner is because there's just way too much liquidity, and at lower levels you would see buying. And look, even from FII point of view, even they would not want, even if they want to sell, they would not want market to just fall non-stop, because in that case you can't even sell. The 2-day counter trend rally sort of lifted stock prices higher so that you could again sell, and that's what's happening right now. So I think right now what you have is 10,276 on Nifty. That's a sacrosanct level for the longs. 24,781 on the bank nifty. But the bigger trade may emerge for shorts with yesterday's highest stop. If yesterday's high is taken, in that case the market may once again resume its uptrend, but that's not the base case. The base case is that right now the counter trend move is over with the 20 DMA halt, and now the market resumes its decline and maybe once again test the 200-day moving average.
Actually that reminds me at the Trust Capital when Ramesh Damani was quizzing Nilesh Shah and Rakesh Jhunjhunwala and the others. At one point, Nilesh said, yes, at the most I expect it to go up till 10,000. And Ramesh asked, is that because you can't sell beyond that? I mean, when you sell, there is no base for the market. There is no depth for the market. So that might come in handy. Yeah. That you cannot really have too much of a fall because it will become an uneconomic fall even for the seller.
Okay, so 10,276, that's the level we're watching on the downside. But in the meantime, let's also get you some opinion now and tell you what wise experts have to say as we head into trade this morning. We have a cautious call coming from both Morgan Stanley and UBS today, so that's interesting. Jonathan Garner of Morgan Stanley reduces their overweight in India further to 50 basis points from 150 basis points earlier. He says this largely reflects some disappointment in earnings. He says their Indian strategists note that Q3 FY18 growth was weighed down by public sector banks and oil companies. Morgan Stanley analysts see the impact of higher oil prices, the election calendar, and prospects of a higher deficit as obstacles for the market index. Jonathan says quantitatively, India ranks well on a fundamental basis, but valuations are not particularly cheap, and earnings estimates revisions, while near record highs for India, are now lower relative to regional peers.
Okay, and more of the same coming from UBS. Gautam Chowcharia of that brokerage says the Indian equity markets have done well since 2014 despite sustained earnings cuts. He says a positive narrative has helped reform, falling interest rates, improving macros, PM Modi's majority government and strong local flows. However, he says some cracks are emerging in this narrative. Many of these may be more often near-term sentiment dampeners rather than changes in the fundamental trajectory. He maintains their nifty base case target of 10,500 for end 2018, which is based on one-year forward PE of 18 times and doesn't incorporate a lower risk premium due to these concerns gaining a foothold.
Okay, why don't we get you some money market views as well this morning, tell you how to approach that space today. Pramit Brahmavat of Veracity says a stronger dollar and weak domestic equity market will continue to put pressure on the rupee. He expects the spot dollar INR pair to trade in a range of 64.80 to 65.20 today.
Okay, and on bonds, Dhaval Dalal of Edelweiss says Indian government bonds appear to have stabilized after the 10-year benchmark bond yield touched 7.8 last week. He expects government bonds to consolidate at current levels before charting their next course based on the developments in local and global macroeconomic landscape. Says a weekly close below 7.6 may indicate a reversal in the current uptrend in yields. That said, he expects 10-year benchmark bond yield to trade in a range of 7.65, 7.75 in the near term. Today the yields are higher, obviously because of global yields.
Oh yes, and obviously when in the currency market you will see that trend play out, the global dollar strength as well. But over to Mangalam then for the world view.
Well, if you're looking at some green, it's not on the global screen. In fact, validating the old classical adage that when everything falls, what rises is correlation. The Dow snapped a 4-day rally down about 300 points, and that was on the back of Fed Chair Jerome Powell's speech, where he said that there could be more than 3 rate hikes this year if they have to go ahead and contain inflation. On the back of which, we saw a spike in the US Treasury yields as well. They are just below that 3% mark at 2.91. We'll keep an eye out on that. The losers were stocks from the consumer space. We had Disney losing, Home Depot losing, even Apple lost in trade yesterday. We all look at Amazon to go ahead and buy our doorbells, but Amazon went ahead and bought a Ring doorbell for about $1 billion. And this comes at a time when the US Consumer Confidence Index is at a 17-year high at 131. Across the European markets too, there was a fair bit of red as far as the frontline indices are concerned, offset by the gains in the media stocks. Sky was up 20% after a proposed bid from Comcast at around $31 billion. Emerging market space too, we saw about 1% of a cut in both the Russian and the Brazilian indices. The only outperformer I was struggling to find is the Ukrainian index, up about 2.2%. Asian markets lower by weak industrial output data coming in from both Japan as well as China. The dollar strength and the yen weakness not really helping the Japanese index. The SGX Nifty indicating a start around that 10,500 mark.
A slightly long shot, isn't it, Mangalam, to expect us to follow the Ukrainian index.
Right.
Thank you very much for that. It was the Federal Reserve Chair Jerome Powell's statements that are important. He downplayed concerns over recent market volatility. In his first appearance before the Congress, Powell indicated that the Fed plans to hike rates 3 times this year and that a 4th hike is on the table. Okay, what does this mean and how long are we going to see markets parse those comments? Global strategist of Capital Markets Group, Jeff Lewis, is joining us. Good morning, Jeff. Thank you very much for agreeing to speak with us. Well, there is, of course, this round of selling, but, you know, the US 10-year has not gone back to 2.95 that it did the week before. It is at 2.90. So you think the reaction is here, but there isn't much more that we should expect by way of market volatility?
Yes, I think that would be my view. I mean, the markets seem to have honed in on Powell's statement that the global economy had picked up. There were signs of the U.S. economy strengthening, and that this would lead to some tightening. But if you look at the bulk of his statement, it was perfectly consistent, I think, with continuity with the kind of policies pursued by Janet Yellen. That's what we had been expecting ever since Powell was nominated for the Fed chair back in November. So I think that the majority of his testimony was actually consistent with that view. So I think the market is now well placed for 3 interest rate hikes. So I think Powell, on the whole, did quite well in terms of his performance, and that markets have maybe overinterpreted it.
Okay. So in that sense, Jeff, how do you see the market trajectory from here? Because this year has not been so great, not just for developed markets, but even for emerging markets like India. Do you think it could be a much tougher year than what we saw the year before?
Well, I think it's a good year for the global economies and possibly a tougher year for markets, as you say. Certainly, we had exceptionally low volatility last year, and we had a degree of investor complacency, I think. And it was time for markets to correct. Now, what follows now, I think, is probably going to be a more volatile path through the rest of the year. I think there will be some inflation scares. There will be some worries over the pace of monetary accommodation removal, but we still believe that you're looking at decent earnings growth and an improving economy, and that at the end of the day, that should support probably low single mid-digit return.
Okay. Jeff, good morning. The Indian market has underperformed this year. How big is this domestic issue of this bank fraud for investors? Is this just a bank-specific issue, or is this being looked at as a economy issue and a market-specific issue as well?
I think it's been looked at more as a sector-specific issue. I think the foreign investors haven't really changed their macro view of India very much, although, as you said earlier, we have had a few small cracks appearing recently in terms of the trade deficits and inflation a bit higher, and the RBI expressing concern over inflation. So there have been a few wrinkles, I think, but the bigger picture hasn't really changed that much.
Okay, so what would be your pecking order? First of all, EMs versus DMs, and within EMs?
Well, we would be preferring non-US markets in 2018, so overweight Europe, probably neutral Japan, overweight emerging markets, and with that preference for Asia over Latin America.
Okay. Is the concern over inflation a bit misplaced, do you think? Because, I mean, in today's day and age, long-term inflation at 2.5% and the US economy growing at 3% is not a bad thing, right?
Well, exactly. That's really our view in a nutshell. We think that there are still reasons why global disinflationary forces are likely to contain U.S. inflation to a degree. We think that there's still some flexibility left in terms of entrance back into the labor force. And there were some temporary factors which depressed inflation last year, which have reversed, but there's no sign of a strong inflation breakout.
Fair point. Thank you very much, Jeff Lewis, for giving us some context to Jerome Powell's statement. Otherwise, bullish on earnings and on economic growth globally, but yes, a little bit of concern over India. We have to take a break, and while we do that, let's leave you with some more statements of the new Fed chairman. These words are going to reverberate across financial markets, and therefore, listening to those statements, we are coming back with our top 10 list of stocks.
These interest rate and balance sheet actions reflect the committee's view that gradually reducing monetary policy accommodation will sustain a strong labor market while fostering a return of inflation to 2%. Engaging the appropriate path for monetary policy over the next few years, the FOMC will continue to strike a balance between avoiding an overheated economy and bringing PCE price inflation to 2% on a sustained basis. What we've seen is incoming data that suggests a strengthening in the economy. We've seen continuing strength in the labor market. We've seen some data that will, in my case, add some confidence to my view that inflation is moving up to target. We've also seen continued strength around the globe, and we've seen fiscal policy become more stimulative. So I think each of us is going to be taking the developments since the December meeting into account and writing down our new rate paths as we go into the March meeting, and I wouldn't want to prejudge that. It's very typical for the yield curve to flatten as short-term rates come up as the economy strengthens, and I don't see a particularly large. There's always a risk of a recession at any given point in time. I don't see it as at all high at the moment.
We wake up to negative cues from across the globe. Most of the Asian markets are under pressure. In fact, the Chinese market is leading the losses this morning after the Chinese official PMI data came in less than what was forecasted at about 50.3. The forecast was 51.2. But that apart, the entire market is reeling under a bit of pressure after the Fed statements that came in. But our research team is here to give you the list of top 10 stocks to watch out for as we head into trade this morning. Anuj, what are you looking at today?
So, two stocks, one large cap, one mid cap. Maruti, my sense is the two-day rally that we had has fizzled out once again at the 20-day moving average. There was strong delivery selling yesterday. So, the point here is once again, large money is moving out of the erstwhile leaders. That's something to watch out for. IT should do well, and KPIT Tech is really the strongest mid-cap IT stock. It's outperformed Nifty by 18% this year, and even the IT index by 9% this year. So, regardless of how the market moves, my sense is mid-cap IT should do well today.
Okay. Well, I'm the harbinger of red news today. The PSU banks have been given a stiff target by the Department of Financial Services. The tweet yesterday indicated they have to look at all their 50 crore plus NPAs and check it for fraud. I mean, this is routine. After such a big fraud, you would want all of them. I mean, I'm sure this diktat would have gone earlier and it was tweeted now. But there's always a fear in the market that there's more bad news to come. And yesterday we also saw that the investigative agencies questioned ICICI Bank's executive for being part of the consortium of lenders to Gitanjali. So all this will mean a foreboding on the markets on both the ICICI Bank stock as well as PSU banks.
Okay, well, DLF has emerged as the successful bidder for an 11.76-acre land parcel in Gurugram with a total saleable area of 2 million square feet. Ashok Tyagi, the Group CFO of DLF, joins us on the phone line now to talk about that. Mr. Tyagi, good morning. Congratulations on emerging as the successful bidder there. But tell us a little bit about this particular land parcel. What do you plan to do with it? How do you plan to fund this transaction?
Okay, so good morning. So this land parcel of 11.76 acres is on NH8 on almost virtually bank opposite our existing development. So I mean, in that sense, it's a great strategic fit for us because we have the 110 odd acre cyber city development, we have the new cyber park building coming up, and we have the proposed Mall of India Gurgaon development. So this was a extremely important fit. This obviously will be developed into a mixed-use commercial and IT grade A development. I think it will be a proportion of development for sale and potentially some development for lease. We'll obviously have to detail the plans as we go forward. Right now, obviously, we just won the bid for yesterday evening. So we are still in the process of, to the formalities of making the initial interest payment and then getting the letter allotment and all the next steps linked to that, really.
Okay, sir, I may request you to repeat some of those numbers, sir. We just have you on a slightly disturbed line. But I wanted to ask you, how much is commercial likely to be developed as commercial, how much as residential, if at all? And within commercial, how much will be leased and how much will be sold?
Okay, so this will be all, so there will be no residential component, Lataji, in this.
Okay.
This will all be commercial with maybe some portion of it being IT. So there's no residential in this. Absolutely.
Okay. And in terms of the money involved, what will this do to your debt? What's the debt on the books currently? And, how will it look like, say, over the next 6 to 12 months?
Okay. So, Sonia, this is being, so this is not a part of the Cyber City joint venture with GIC. Okay. This has been bought by a DLF subsidiary. Okay. As we reported in December end, that pursuant to the entire GIC transaction, our net debt at the DLF level is now about 5,500 crores. Okay. And so obviously, we will plan to fund it through some internal accruals, including, partially money coming out from the proposed QIP as and when it happens. Yes. And I think taking some residual leverage on it. I think our leverage levels are now very comfortable, so that doesn't worry us. There's also a full installment payment plan, so it's not that I have to pay the 1,496 crores in the next 30 days, Okay. There's, I think, a 2-year payment plan around it.
That's exactly what I was going to ask you. Any more details on how you will meet this 1,496? 10% by 1st March, 15% in 30 days, and what do you do with the remaining? And I think 25% by 60 days.
Yes.
And so thereafter, the remaining 75? Sorry.
So the first 50%, I think you're right, based on this, goes in the first 60 days, and then you have a 2-year installment for the balance 50%.
Okay. So initially, you will see a bump up in debt for the first 50%.
So you will not see a bump up in debt because, if you recall, we had received 9,000 crores of money in December. We have repaid debt of 7,100 crores, so we still have a corpus left from that.
You spoke about the proposed QIP. Has the board taken a decision on the timeline, on the amount, anything that we can expect?
So as far as the amount is concerned, the total number of shares to be offered is slightly more than 17 crore shares. That board and the shareholders had already blessed in December. Okay. Now the timing for that, obviously, as you know that currently, markets have been slightly choppy, but clearly we do want to look at it and conclude it as early as possible. So, we're all focused on that. I can't give the exact time. It's not going to be very long for sure.
So how's demand?
Okay. So, last year for about 4 or 5 months, we had almost suspended our residential sales completely. Okay. And we recommenced them post-November once all the RERA formalities were behind us. So, in all fairness, I'd say that the demands began slightly more than trickling back, but not pouring. But that's clearly better than last year for sure. Okay. So, in some sense, in both our luxury condos at Crest and Camellias on Golf Course Road, from November we have been seeing consistent demand, maybe running at about 200 crores a month sort of a thing, which is far lower than what we were at the peak, but clearly better than what we were in the last year and a half. Okay. And we expect greater inquiries to come. The secondary market also has begun sort of, evincing some interest, and the quantum of deals is gradually moving up. So I'd say cautious uptick is what I'd say.
Now, what about this new bit? When will the facility come up on this new parcel that you have won, and how do you see the demand for that?
So this will be commercial. Yes. Honestly, and while obviously we will have to work the details, I think it will be a mix of maybe some sale and some lease, but let's see how it forward. So right now, I think it will still take a few months for us to completely finalize our plans, get the requisite approvals done, everything, and then commence construction. So I think the construction is still, the first the commercial closure with HSIDC, then the entire process of getting the additional transit-oriented development FSI, and then the entire process of approval. So I think we're still talking maybe at least a year for the approval process to conclude before the construction commences.
Okay, so 1 year. Just one final question. Since you've concluded your deal with GIC, how will the DLF-GIC JV now function in terms of what are the launches that we are looking at? Will it function like a private REIT of sorts? What's the game plan now?
So the DLF-GIC JV is an operating company, Cyber City, as you know. So it has about north of 25 million square feet already active leasing space. It clearly is right now in the, we are closing we're in the final stage of completion of two big commercial towers, one in Gurgaon, one in Chennai, which should both be commissioned and up for leasing, I think, within the next fiscal. Then the JV is already looking at the next development in Gurgaon. So, we are looking at in the cybersecurity side, there are clearly some spaces that we need to build. So we are still looking at the next tower that needs to come in there. Okay. So, that's an engine which is running, frankly, and at some stage inside, in the medium term, we'll also commence work on the big Mall of India Gurgaon project, which again will be in the cybersecurity JV.
All right. Thank you very much, Mr. Tyagi, for making this early and unscheduled stop and explaining to us the import of this about 1,500 crore rupee land parcel that DLF's subsidiary has won. It's a great fit, as Mr. Tyagi pointed out, but on the other hand, as he's saying, demand is trickling in, not pouring.
Okay, so it's the rental business, the commercial business that's doing much better than the residential business. But it's a big, big day for Fortis. Finally, we'll get to hear about their Q2 and Q3 numbers. Ekta joins in now to tell us what we can expect from this board meet. Ekta?
Well, yes, Sonia, like you mentioned, the Q2 numbers have been delayed all the way since November 14th, and we have the Q3 numbers which have been delayed all the way since Feb 13th, 14th. So this actually board meet is going to release the Q2 and Q3 numbers as of now. And the most important thing to watch out for will obviously be the auditor's report. This is on the basis of reports doing the rounds that the promoters have siphoned off around 500 crores from the company. And basically the rationale or the explanation by the auditors will be very closely watched, because there were reports that they had refused to sign off on the numbers as well. So the stock will be in focus on account of that.
Okay. Yes, lots to watch, and if and whether they will be able to give their results, and what will be the auditor's comments. Nimesh, HDFC on your radar for the QIP?
Yes, sir. So small fundraising from HDFC via QIP. The book was launched last evening. They're looking to raise 1,900 crores, offering 1 crore shares at a floor price of 1825. I believe there is a very strong demand, so this will go through very smoothly. With this fundraising, the book value for HDFC will go up by 2.5%, and essentially the money is going to get used for organic and inorganic growth opportunities. So watch out for HDFC, a mild green, because there is no much discount in the QIP issue.
Okay, thanks a lot for that. Well, moving on, let's find out why DRL will be in focus this morning. Ekta?
Well, they have received approval for Strattera generic, which is basically used for, attention deficit disorders. But it is a sentiment positive, because it is, a drug which has seen a lot of competition already in the US. But the fact that they've received approval in the US should go down as a sentiment positive for them.
I sometimes need that.
I think all of us do, right?
Well, positive news here. The race to buy the debt-laden company Binani Cement has actually gotten a little hotter. Sources tell CNBC TV18 that a consortium of Dalmia Bharat and Piramal, that's Bain Piramal actually, have emerged as the highest bidder. The person who broke that story for us is joining us on the phone line. Okay, she isn't. Ritu Singh filed this report yesterday.
Dalmia Bharat, in a consortium with Piramal Bain's India Resurgence Fund, has emerged as the highest bidder, or what banks call H1, as far as Binani Cement is concerned. This race is very closely fought. Aditya Birla promoted Ultratech Cement was also neck to neck with Dalmia Bharat when it came to the bids. Both of the players had bid anywhere between 62 to 6,300 crore rupees to acquire assets of Binani Cement, and we're talking about a 6.25 million ton, plant that Binani Cement has in Rajasthan. Of course, it also has a global presence as well, but we're talking about the India assets here. Now, do remember that there were several rounds of bidding for Binani Cement since it was taken to the NCLT last year by Bank of Baroda. Earlier, the bids had failed, and in the last round, IDBI Bank had also come in as a new lender in the consortium because of the corporate guarantee exposure that they had to the company. And with this fresh round of bidding, we understand in today's meeting, banks have declared Dalmia Bharat as the lead bidder, so negotiations will continue with them, and then the proposal will be taken to the NCLT for final clearance.
Okay, that's Binani, of course. Let's go across to Anisha for rest of stocks and news.
Well, Anuj, I'm the messenger of good news today, starting with Sadbhav Infrastructure, where the company has been declared the lowest bid of 1,050 crore worth of hybrid annuity project in Gujarat. That should hold up in the green. Bharat Forge, a couple of developments there. First up, they have completed the divestment of the balance 26% stake that they had in the JV with Alstom or GE. So that goes off their books and that has been completed. On the second hand, they have the acquisition that they announced in February earlier in the month. They have now paid around 16 crores to complete the first tranche of investment by buying around 30% stake in Talk, the company in Pune. Other than that, TCS would be in focus because the long-standing customer, the Bank of Muscat, actually has gone live with one of the new products. So that is one good news coming for that particular company. Lastly, on Cipla, they have partnered with Roche India. Now, this partnership will help Roche India's marketing of products of cancer as well as arthritis. So that company also should be in focus today. Back to you.
Okay, thanks a lot. We love to listen to good news, don't we? Thanks a lot for that, guys.